amazing when you think about it. The power of a government policy. I mean, it can literally reshape society, right? Open doors and create opportunities where there were none. And on paper, the formula looks perfect. You've got this deep-rooted problem like inequality. So you launch these big, ambitious, well-funded programs. The goal is simple, really. Give everyone a fair shot. But what happens when those policies, which are designed for a fair game, get dropped into the real world? A world where the rules are, well, they're just different. It's like an invisible thumb is pressing down on the scales. And that is the story we're getting into today. It's about how some of India's most promising ideas to help entrepreneurs from marginalized communities just slammed headfirst into a wall you can't even see on a spreadsheet. Okay, so first, let's look at the promise itself. And we're not talking about small token gestures here. This was a whole suite of big national programs. All right, so there were 4 main government schemes put in place. We've got Mudra, Stand Up India, a special venture capital fund, and even a public procurement policy. Now, all of these were designed to tackle one big, well-known problem, a serious lack of capital for entrepreneurs from historically marginalized groups, what are officially known as scheduled castes and scheduled tribes, or SC/ST for short. We're talking about communities often referred to as Dalits and Adivasis. The goal was super clear: get money and opportunities right into their hands. So the promise was made, the programs rolled out. But did reality actually match up with that ambition? Yeah, this is where things get complicated. And to see how, we've got to look at the numbers. Okay, let's start with the Mudra scheme. If you look at the smallest loan size, they call it the Shishu tier, things actually look pretty good at first glance. SC/ST entrepreneurs got more than 23% of these loans. So you're thinking, great, the policy's reaching them, at least on this small, micro level. But watch what happens when the loan amounts start to climb. When we jump to the biggest loan category, Tarun, the share for SC/ST entrepreneurs just collapses. It drops to just over 7%. And at the same time, the general category share shoots up to almost 80%. It's a crystal clear pattern. The bigger the loan, the fewer marginalized entrepreneurs you see. And if you thought that was bad, the Stand Up India scheme tells an even more shocking story. I mean, this program was specifically launched to create entrepreneurs from SC/ST communities. But look who got the money. Over 80% are women, and SC and ST entrepreneurs combined, less than 20%. What's more, research suggests a lot of these women were actually from upper castes. So the very group the policy was meant for was basically being ignored. And the pattern just keeps going. Take government contracts. There was a rule that said 4% of all government purchases had to come from SC/ST-owned businesses. The reality? It's been consistently less than 1%. So you see it across the board, right? From tiny loans to big government contracts. The people this was all supposed to help are being left behind, which leads to the million-dollar question: why? All right, so what in the world is going on here? To really get to the bottom of this, we first have to understand the official sort of textbook reason for why these systems are failing. This whole way of thinking, which is behind most of these policies, is called neoclassical economics. And the basic idea is that markets are, well, they're rational. Lending is supposed to be a purely logical process. It's all about the numbers. A bank just looks at your credit score, your assets, your risk, and makes a cold, hard, calculated decision. So if you look at it through this market logic lens, the failure almost seems predictable. I mean, think about it. First-time Dalit entrepreneurs, they often don't have a formal credit history. For banks, it's expensive to process a ton of small loans. And then there's the risk. They can't be totally sure a new borrower will pay them back, but government rules often stop them from charging more interest to cover that risk. On top of all that, you have this culture of fear, where bank officials are just terrified of approving a loan that might go bad. So you end up with a system that, by its very nature, avoids poor, first-time, marginalized applicants. But doesn't that explanation feel like it's missing something? That whole logical, numbers-only argument, it just feels incomplete, because it seems to be ignoring this massive, invisible force that's shaping every single one of these interactions: caste. And this is where we get to the deeper truth, because studies have shown that even when you account for everything else, we're talking the same amount of land, the same income, the same economic status, caste still plays a huge, significant role in who gets a loan. It's proof that this isn't just about the money. So this is the fundamental clash, the big problem. You have policies that are built for a market logic world, a world that's supposed to be objective, rational, and totally caste neutral. but they have to operate in the real world in a social reality that is subjective, biased, and completely shaped by caste. And right now, that social reality is winning, hands down. So what does that social reality actually look and feel like on the ground? Well, let's hear from the people who are living this every single day. This is where all that theory just smacks right into the real world. Man, this quote is just heartbreaking. It perfectly captures that invisible wall that exists before anyone even steps foot in a bank. There's actually a term for this, adaptive preferences. It's when the expectation of being humiliated is so strong that people just take themselves out of the game. They stop trying. The psychological cost is just too high. Okay, so remember the economic model we talked about? The core idea is simple. If you have assets like property, you can use it as collateral to get a loan. That's pretty much the foundation of the whole system. And right here, we see that foundation crumble. This man had property worth almost 3 times what he was asking for, and he still got turned down. Think about that. His property rights, his assets, they meant nothing in that room. It's a perfect, painful example of how, for so many Dalit entrepreneurs, even having valuable assets just isn't enough to get past the institutional bias. And then there's this last example where you can really see how caste and gender bias just pile on top of each other. You have a woman with a PhD in chemistry, a PhD, and a solid business plan. And she's told by a bank official to just try for a government job or maybe focus on marrying a rich guy. I mean, can you believe it? Her ambition, her qualifications, all of it just brushed aside for this incredibly patronizing stereotype. So when you hear these stories, it becomes really clear that the problem isn't something you can fix by just tweaking interest rates or coming up with a better credit score. The issue goes way, way deeper than what any purely market-based solution could ever touch. So in the end, we're left with this massive contradiction, right? We've seen how these really well-intentioned caste-neutral policies completely fall apart when they slam into a caste-based social reality. And that forces us to ask a really tough question. If the tools we're using now are broken, what does it actually take to create a system where opportunity is real for everyone? What does a truly level playing field even look like?